Well, look, this is not what we wanted. I mean, people like me have been talking about the broadening of the rally, and you were getting that. But this week you've had the downside, which we didn't want to see, of tech giving up gains. And it's been the whole week, right? Microsoft had a bad reaction to earnings. Having said all that, I don't think at all that you're supposed to throw in the towel on these big tech names. I think that their valuations are, for the most part, very much defendable. I think, in fact, that this market is trading at least as much, if not more, on the macroeconomic headlines of lack of fiscal stimulus and the virus surging as it is on the earnings numbers. Because, frankly, look, if you want to take, Apple, there's a reason why they underperformed on iPhone sales. People are saving up for the iPhone 12. And Amazon, I mean, this is what they usually do, right? They have a quarter every now and then where they say, listen, we're going to spend a lot more than you expect, but it's an investment in the business. It's not a time to sell these tech stocks. I know, Scott, we've also talked about some of the high-flying software names. That's a different story. These are the bellwether tech names now that we're talking about, and they're attractively priced. Today's movement doesn't throw me at all.
All right, so, Kerry, don't throw in the towel is what Jim says. That's different from preparing for more losses. Do we need to do that? Do these stocks need to come in a lot more from where they are? And I'm talking about the big four.
Well, it's a great question, Scott, and I would say the following. These are the growth engines of the economy right now. They're stocks that can survive and prosper during COVID, and it looks from the virus and the lack of stimulus, the fact that the reopening play is getting pushed back further, that in order to find pockets of strength in the economy and in the market, we may be back to the growth stocks and the tech and the digital platforms. So if they're down 15% from the peak, 20% from the peak, I think that's a reasonable place to think about a reentry. Apple was up to a 34 multiple at the beginning of September when they split. Now it's at 29. Well, actually, today it's less than that. When you get these stocks selling for roughly market multiples or slight premiums, I think you begin to see why they're attractive. And I believe that the market is probably going to come back to them.
Well, Degas, where's the bottom in tech? I mean, is it close? There was a suggestion earlier this week that, Microsoft wasn't going to find its bottom until tech bottomed. Well, now you've got all of these other names, except for Google today, selling off and selling off hard, names that ran up into their prints quite substantially. Apple up 50% year to date. Amazon up 67% year to date. By the way, those numbers, Degas, are coming after the big slides that we're witnessing. Those numbers were well better yesterday going into the numbers.
Yeah, I go back to what Jim said earlier, in that you can explain the pullback. And I think a lot of this is happening because people are just taking some chips off the table. And so I like these companies still. The business case has not changed from last week. These companies are the stalwarts of the technology, and they're there for a reason. And so I don't think that this is a time to exit any of these names, and we're still holding all of these names in our portfolio.
John, the business case is the reason why these stocks got to where they were, right? We totally get it. There's a reason why the stocks ran up as much as they did. I think you can ask a question as to whether they ran up too much, whether the business case was really justifying some of the move we had in these stocks. Apple missed their iPhone revenues by $1 billion. $1 billion.
Yep, and that's not an offering by them, of course. That was collectively our estimate, because they don't give guidance on that, Scott, which is one of the issues, with Apple when they stopped doing that. However, when you see 40% of an installed base, over 1 billion of these devices, and you see 40% of them have devices that are 3 years or older, that super cycle that many have called it is still out there and waiting for the iPhone 12 and 12 Pro. As Tim Cook said, though, in the call, they have had trouble meeting the demand for those pre-orders for those phones, as well as Macs and all this other stuff. So I think you work through this, and I think you look at the numbers where Apple is now, Scott, and where it will be when they start fulfilling the demand that we know is out there. And the China issue, of course, as you said top of the show, I think it's not them turning away from U.S. corporations over in China. It was the same thing that Degas just cited, it was people waiting to put that money into the newer products rather than buying a product that, you know, is over a year old or older. And I think that's just a normal course of business.
Kerry.